Hello everyone, I am Ankit Anjaria. By qualification, I am a Chartered Accountant, Company Secretary and Law graduate from Mumbai University. I will take you through the laws relating to housing finance. So far, we've seen the credit appraisal, the legal appraisal and the technical appraisal. That is the process for giving a loan. But there are certain laws which also govern the running of the housing finance company. The prime regulator for the housing finance companies is now the RBI. But to give you a brief history about the regulation being taken over by the RBI, it was in 1977 that HDFC was formed, which was India's first dedicated housing finance company. 10 years later, the government felt a need to have a dedicated regulator also to govern the housing finance company, and thus was NHB born. In the year 1988, the NHB was officially set up and became the regulator for the housing finance companies. The objective of the NHB was to not only regulate the housing finance companies but also to promote and train housing finance companies. Over the years, the role of the NHB evolved, and apart from being the regulator for the housing finance sector, they also started becoming the refinancer and a supervisory body for the housing finance companies. They also conducted trainings and market research and analysis for the housing finance companies. In the year 2019, after the fiasco of ILFS and some other housing finance companies and the general frauds in the NBFC sector, the finance minister thought that there was a potential conflict of interest because the NHB was not only the regulator but also was the lender to the housing finance companies, given its role as a refinancer. And in the year 2019, the finance minister proposed giving the regulation of NHB back to RBI. In August 2019, the Reserve Bank of India came out with a press release saying that starting 13th of August 2019, all the housing finance companies will be regulated like an NBFC under the garb of NBFC-HFC. And in the interim that the RBI comes up with the regulations governing the HFCs, the existing regulations which are issued by the NHB will continue. In February 2021, RBI came up with a consolidated master directions governing the housing finance companies. And this is a 200-250 page document which covers everything right from the registration of the housing finance company to the regulation, to the giving of the loans, deposits, auditor's report, governance, disclosure in the balance sheet, entry into other sectors such as insurance, appointment of directors, etc. So it's a wide gamut of things that the master directions cover. So the master directions, as I said, inter alia, cover the following broad aspects: the definitions, the requirements for registration, prudential regulations, deposits, governance, opening and closing of branches, auditor's report, reporting requirements, and the code of conduct for direct selling agents and recovery agents also. So apart from the Companies Act, which basically governs the running of the company, additionally, the RBI has set up these rules which govern the running of the housing finance companies. I will now take you through each of these broad aspects in a manner so as to enable you to understand the running of the housing finance company. So we will not get into specifics of everything, but I'll give you a broad overview of what the RBI basically intends to cover. So the first one is, because these regulations talk about housing finance and housing finance companies, it is important to understand what is housing finance company. Housing finance company, the RBI has defined as any company whose principal business is to provide loans for housing finance. Now the term principal business is defined to say if 60% of the total assets of the company are dedicated towards housing finance, then that company will be termed as a housing finance company. For all those companies who as on 17th of February 2021 were not compliant with these regulations, there is a transition period that is given. But a majority of the companies were compliant with this, and this is nothing new for the housing finance sector as a whole. Now we've learned one more term called housing finance. So what is housing finance? Housing finance, there is a definition which the RBI has given. Basically, this covers all the finance that is given to any person for purchase or construction of a house, for repairs and renovation of an existing house, and to builders for construction of residential houses. Apart from this, whatever loans are given are considered as not housing. So when I say all other loans, you may take a personal loan where you are mortgaging your residential house as security with the bank or the housing finance company. Even though the loan is taken basis the security as a residential house, that won't be considered as a housing loan. The other impact of housing finance, apart from falling in the definition of registration, there is a direct impact in the Income Tax Act also. There is a section called 36(1)(8). I will again not get into specifics of what this section talks about, but to broadly give you an idea, there are certain exemptions that the Income Tax Act provides if loans are given for the housing finance sector. We will now talk about the registration requirements. So now that we know what is a housing finance company and what is the business they are supposed to do, the company will need to register itself with the RBI. Over here, it should be noted that all the companies which are in existence and which were already registered with the National Housing Bank need not seek a registration again. They simply need to start complying with the regulations that the RBI has issued. So as far as the registration requirements are concerned, the RBI has said that the minimum net owned funds needs to be 20 crore. The net owned fund calculation is very simple. It is the shareholders' funds, which is the paid up capital, plus the free reserves and minus the accumulated balance of losses, which is the capital which is attributable to the shareholders, minus investments in other subsidiary companies, investments in companies in the same group, and investments in other HFCs. So all these investments need to be deducted. You also need to deduct the loans, deposits and advances given to all these companies. So this is the definition of net owned funds. And net owned funds, as I said, 20 crore minimum needs to be there for you to be registered as a housing finance company. If you do not fulfill this criteria, then you cannot be registered as a housing finance company.